Ignition sequence starts. 6, 5, 4, 3, 2, 1, 0. Liftoff. We have a liftoff.
Hey everybody, this is the Digital Asset Investor, and I am recording this from my car. I do not normally do this. I do drive a truck, and you probably can hear the engine running. It's a loud truck. In fact, I bought this truck, and it had one of those mufflers on it, and my wife has been mad ever since. But anyway, so I wanted to start here and show you this article right here. This is gold Switzerland. This implosion will be fast. Hold on to your seats. The massive money creation. Let me check to make sure this thing's running right. Okay. The massive money creation in the 2000s has led to the debt and asset bubble, which is about to burst. Investors will be shocked by the speed of the decline and won't react before it is too late. Massive money creation by central and commercial banks in this century has resulted in a growth of global assets from $450 trillion in 2000 to $1,540 trillion in 2020. It's crazy. Then they go on down here about Biden banning Russian gold, and then down here, gold, right here, major gold move coming. As the chart below shows, gold is finishing a cup and handle technical pattern, The point is here, folks, if the world has ever been primed for gold to go nuts, it has now. It's not Bitcoin, it's gold, folks. This is why Glint's my sponsor. This is why I keep putting money in my Glint account so that I have spendable gold. I also buy physical gold, which you can buy through Glint as well. The link will be in the very top of this description. Now, moving on to this. This is Zoe Cruz, who was with Morgan Stanley, was co-president Morgan Stanley, now at Ripple. Watch this. If I might need to hit the refresh on that. Come on.
To 10 crypto assets, cryptocurrencies. And to me, saying I'm only going to put Bitcoin, I'm only going to invest in Bitcoin because it's the current winner, or the digital gold as they call it, is equivalent to say that in the early 2000s, you're only going to invest in one internet stock. And I don't need to tell you whether it's social media, Facebook didn't exist by and large. I mean, Netscape was the browser of choice with 75% market share. Google is the leader now, and Netscape doesn't exist. So to me, it's the equivalent thing. I don't know, there will be winners and losers, but I wouldn't want to have Bitcoin end up being the Netscape of your investment opportunity. And again, the way I look at that diversification, each of those currencies was designed differently. It has underbellies, all of them do, but it also has clear winner characteristics in the alley that they chose to compete in. So Bitcoin is the digital gold. So when I talk about diversifying, it's the idiosyncratic risk of that particular cryptocurrency. So the pluses and the minuses of Bitcoin, digital gold, the oldest, it made a lot of people rich. So you have a lot of passionate people that would, be very good at defending it and its construct. Its underbelly is actually, it costs a lot of energy. And I don't need to tell you, ESG, environment, social governance, is the new thing. The bigger the blocks, the more successful Bitcoin becomes, the more that's an issue. XRP is the alley it has chosen, and it is the leader in that class, is basically the cross-border payment system.
Folks, all you children out there, you children of Bitcoin out there, what you just heard was the adult in the room trying to talk some sense into you. I hope you're listening. I'm not going to go into this article, but it was an opinion post from the Washington Post, why crypto will rise again. And I said, I will be accumulating until it does. And I don't believe I'll be accumulating for long, because I don't think this thing's going to last long. The case of the century from Riz XRP. Here's a little clip from John Deaton.
That there's a good chance that Ripple outright wins completely on all sides of the fence. I'm confident that the judge isn't going to declare today's XRP a security. That there's a good chance that...
Now, folks, let me show you something. This is what you call marketing. I've had a lot of people ask me if I felt like Uphold was safe. Well, the truth is, Uphold is where I buy a lot of my digital assets while I'm buying these dips. Okay? And so I'm not comfortable keeping my digital assets on any exchange, but if I am, I'm keeping some on to Uphold just because, and they're not a sponsor or anything. I'm not getting paid to tell you this, by the way, but Uphold is one of the ones where I buy. They have a lot of different digital assets, but they're advertising the right kind of thing: regulated, transparent, secure, and then they go on. I think it was, we never lend out your money. So that's some pretty confidence is what we need in times like this. And meanwhile, crypto lender Voyager Digital has filed for bankruptcy. Now, there's many of you out there that aren't BitBoy fans, regardless of whether you're a fan or not, he's right in this tweet. Companies SEC and Dirty Gary Gensler should have gone after Celsius Voyager. Company they went after, Ripple Labs. Are you seeing the problem here? He makes a very good point. You know who makes it even better? Is Wheezy. Look at this tweet. There was an article that came out called The Secret Disclosed. JPMorgan owns critical Ethereum infrastructure. And he says blockchain and crypto was designed to remove the middlemen, banks. So JPMorgan positioned themselves in ETH and purchased in big, disguised whale to try and take over the space. Then attacked the competition by manipulation, and by using their connections, they did it. ETHgate. All right. Now, folks, there's nothing new under the sun. Here's the article right here, by the way. The secret disclosed. Now, here's what's interesting. There's a section in this article about consensus about them getting sued. 35 former employees of the company who make up more than half the shareholders want the deal that saw fundamental intellectual property, more specifically Infura and MetaMask, transferred to CAG, to Consensus Software Incorporated, a new entity. The deal, popularly known as Project North Star, saw JPMorgan get a 10% stake. So these people are literally suing them over this. And I believe they're suing them partially because of what the XRP community has dug up over the last year. Why it matters. This lawsuit is about much more than the fact CAG was cheated out of its intellectual property. It brings to light many failures of the Ethereum blockchain in terms of decentralization. MetaMask and Infura are arguably the most critical infrastructure to the blockchain's ecosystem. Infura, for one, is the node network that processes about 13 billion code requests every day. Okay, so JPMorgan's move to get a slice of Ethereum is a reflection of the desire by many financial institutions to get into the space. However, this could be counterproductive for Ethereum and contradicts the whole philosophy behind the establishment of digital currencies decentralization. That's what we've been telling you, folks. This is not decentralized. This thing, it's disguised centralization is what it is, folks. And it's been that from the beginning. Remember, folks, I've told you this story on this channel before. I'm going to play this video clip so many of you can understand it again. It's in the book, The Creature from Jekyll Island. And in that book, the guy tells a story, the actual story of how these guys went on separate train cars, and it was representatives of JPMorgan and Rockefeller, and it was the 5 or so richest families in the world. They sent them to Jekyll Island to plan the Federal Reserve, what would become the monopoly on money, a monopoly on printing money. And that's what they did. That's what you live under to this day with the Federal Reserve. This is JPMorgan's attempt to redo it. And the problem they have is that this time there was social media, and we caught exactly what was going on. Listen to this. This is how the Federal Reserve was formed, folks.
So what happened at the time was the commonality actually of JPMorgan was with Aldrich, and Aldrich's son actually, who was a New York banker at the time, but who wasn't involved in the six people. He just happened to have been a New York banker. He became, Winthrop Aldrich became the head of Chase for decades, but at that time he was not. But the point is there was that relationship, and it was Morgan that actually just had the pass. He wasn't there. He wasn't involved. He was not physically at all at Jekyll Island at that time that the origins of the Fed were being discussed. But he was the name on the book that was associated with these individuals. And so that's kind of how it came down. They would otherwise not have been able to just get physical access onto the property. And it's like any now, elite club thing. It's like you invite people in or they can't come in.
You're talking about 6 men apparently that controlled a quarter of the wealth of the world. That's the data that you hear about, So it's you read about it, but again, so a lot of people said it was a spoof about what the author wrote about him, and he said a lot of other things, but it's a story that picked up a lot of attention on how the world wealth is controlled by a few handful of people. How much do you buy into that?
Well, so these 6 people weren't necessarily all those people. What happened was, like, Frank Vanderlip, who was one of the people, was a sort of VP at National Citibank, which is now Citigroup. So, I mean, there are different people that were involved in the major banks at the time. So, yes, there was an awful lot of money represented at that meeting. And Nelson Aldrich was the head of what we now consider the Senate Finance Committee. And so he was a very established senator, and he had been going back and forth to Europe around this time anyway to collect information.
So, folks, if you're wondering why none of our congressmen, not one, has called for an investigation into ETHgate or Bill Hinman or Jay Clayton, you just got your answer. Ethereum's look at this now, Ethereum's testnet Sepolia successfully transitions to proof of stake. Only one more test left before the Ethereum mainnet merges into proof of stake. But they didn't count on John Deaton, they didn't count on the XRP community, and they didn't count on social media in general. The truth is on our side. We have the video, we have the timeline, and it's not going away, folks. They're going to have to have a level playing field this go around. I'm the digital asset investor. I'm not an investment advisor. This is for entertainment purposes only. Please subscribe, hit the like button, and tell your friends and family that we have the video and the timeline, and all we ever wanted was a level playing field, not some government/bank monopoly like we've had for the last 100+ years. Thanks for listening.